Welcome to this week's update on the hedged option portfolio. After rallying to fresh all-time highs again in mid-December, the price of Bitcoin had a decent-sized pullback over the holiday period, which resulted in a drawdown of several percent in the account. You can see that on the Greeks Live page here. This was partly due to the volatile nature of some of the moves, but also because I continued to hold some of the positive deltas in the form of short puts. This meant that as well as betting on short-term options being overpriced, I was also betting on the price moving back higher. If we go into the account, we can see the current positions. And the only short-dated position I've got here is the put that I've rolled out to the 17th of January, and the rest of it is all longer-term cover, so I do need to add some more positions here. I'll be shorting one extra put and two calls. And I'm going to do all that on the 5th of Jan expiry, which is 2 days away. It's Friday today, so this is Sunday vol I'm selling, so it's already quite low. So this 96,000 put, hopefully for around 42 basis points. And also one of these calls, 98K. I'll put that order in for 65 for now. And now the put's been filled, I'll roll this down to 60. There we go, we've got filled on one call and one put. And I will add one more of these calls, hopefully at 65. Hopefully get a fill here soon, as the offer is better than the mark price. There we go, that's finally been filled. It'll be quicker in the video because I'll edit it down, but that actually took several minutes to fill despite being better than the mark price. So this is the account portfolio going into the weekend. Short a few short-dated options with the usual longer-dated cover. The delta is slightly positive and the theta sitting at about 60, which is quite low, but that's because we're selling weekend vol here and the vols are already quite low, mid-30s. So I haven't collected that much in premium for selling this, but the market's basically saying it doesn't expect any big moves over this weekend. So this is the main account going into the weekend. And as usual, you can track that on the Greeks Live social trading page. And something else I wanted to introduce in this video is I've created a second account. And this smaller account I've created on the suggestion of a viewer to serve as an interesting comparison to the main account. And the main profit generator in this second account will be the same, as I'll be selling the same short-dated options. However, the hedging and rolling strategy will be very different. Instead of purchasing longer-dated options, like I do in the main video account, this second account is hooked up to the Greeks Live Auto Dynamic Delta Hedging tool, which you can see here. You can see I've already done a few trades, so there's a few hedging trades as well already happened. I've covered this tool in some previous videos right at the start of this series, which I will link to in the video description as well. As a brief overview though, what this tool does is keep checking the delta in the account, and then when it breaches the chosen threshold, which I've selected here and here, it will hedge those deltas using either the perpetual or the dated futures contracts. And you can see here I've got it selected to use the perpetuals. Now I've seeded this second account with 0.1 Bitcoin, which at the time was a little over $9,000. So in dollar terms, it was about the same as I initially put in the main account, but the Bitcoin price was a lot lower a year ago. So a year ago, that was equivalent to 0.25 Bitcoin, and now it's only 0.1 Bitcoin. And each day in this second account, I will sell 30 to 35 Delta Strangle, roughly the same as I do in the main account. But unlike in the main account, I won't roll these at all. They'll simply be left to expire with the Greeks Live tool hedging the deltas along the way. Someone asked in one of the comments in a previous video on YouTube how this form of dynamic delta hedging would perform compared to the options I use to hedge in the main account. So going forward, we can use this second account to take a look at how both accounts perform in different conditions. We can already predict ahead of time some of those differences. For example, imagine the situation where the price of Bitcoin dumps, say, 5%, and then quickly reverses the entire move all within a few hours. Well, the main account with the longer dated options as the hedge won't suffer much at all from this. It will barely notice that kind of price action. But this delta hedged account will very likely have racked up some losses in that price action, as a result of hedging the deltas in both directions during that move. I'm sure we'll have a live example of that exact scenario to look at eventually, as well as a few other scenarios for comparison between the two different hedging strategies. As with the main account, I've now added this second account to the Greeks Live social trading page. So if you're on my page on that website, you can just select from the two accounts here. You can see it's up about 2% so far, but it's only been about a week, so this doesn't really mean anything yet. But after a few weeks, we should get some meaningful data to look at. So going forward into 2025, we'll be looking at both of these accounts. Still, the main focus will be on the main account, and we'll be using this second account to just compare the two different hedging strategies. But I'm expecting 2025 to be a very interesting year. Obviously, we've got a pro-crypto president coming into power in the US, so that should lead to some interesting price action, I expect, as we see whether Trump follows through on some of his pro-crypto stances with some actual real policy. If he does follow through, it should lead to some bullish price action, I expect. If he doesn't, the opposite. But either way, it should be interesting. The price will move, and I'll be able to trade that volatility using the options. So that's it for today's video. Thanks for watching, and I'll see you next time.